Hi, this is Randy Finney with Right Side of the Chart, and this is a mid to latest session update for Tuesday, January 27th, 2026. It is 2:54 p.m. Eastern Time as I'm starting the video. And here's what we're going to do in this one. We're going to look at earnings this week, primarily to look at the three. We have the first three, the Mag 8 reporting this week. We're going to have follow-ups over the next few weeks with the remainder. And if there is anything, pretty much anything, normally I would say there's a lot of things that can, catalysts that can break the market out of a trading range. That's this trading range here, the leading index QQQ, just like we had this index here. I would normally say could become anything, but the market is completely shrugging off any geopolitical news. Doesn't matter. Trump, takes out the president of Venezuela, one of the largest, most established countries down there, makes threats of doing, taking, Greenland from Denmark by force, and everything else. You can't even keep up with the latest. So the market just kind of takes everything in stride now. That comes out of the, geopolitical front. We have civil unrest throughout the country right now. And again, it doesn't matter to the markets. The only thing that matters right now, we're in a larger uptrend with sector rotation. I've spoke to that ad nauseum. We'll see which way that goes, whether it is that case of terminal lucidity that I've talked about recently, or whether it is that healthy sector rotation that will be the catalyst to take things to new highs. Again, as I've said, this market will not go up without, and I'm talking substantially, will not go up without the Mag 8. That is, you really can't argue that. It's not just a psychological thing, it's mathematics. Unless the mathematics change on the weightings on the indexes due to the normally large impact they have, it's just a fact. So we're going to look at that and three of the Mag 8 report this week. So let's start out here. Again, this is your trading range. We have a comparable, very similar trading range in SPY, the S&P 500. Again, no different than we had back here. My expectation, whether it's going to prove to be right or wrong, is no different. That if we do, just like then, as predicted, if we broke out to the upside, it would fail due to the technical posture, the negative divergences, overbought conditions, and then the next shot's down to the bottom, and then ultimately out down through the range. And of course, you have to take out the 200. So there's your quick 30-second elevator pitch for the stock markets, if you will. Now let's go to earnings. Okay, here's the earnings calendar. You can access this from right side of the chart. Go to the top menu, resources, and then down on your right, tools of the trade. Under there, you're going to have a link to both the earnings calendar and the economic calendar, or calendars. I have two different variations. You can look at the economic calendars. And so this is it. Let's just dive right in. And I'm going to start out just today. And what we're going to do is play that game I like to play every earnings season, especially around the time the big Mag 7 are reporting, because I consider that peak earnings season, when they mag the big market moving Mag 8, whatever you want to call them. So here's who reported today so far. Some big names: United Healthcare, Boeing, UPS, Raytheon, General Motors. You can see you have a lot of defense companies. You have a regional bank there. Let's just go over a few, not too many. I want to walk forward to the Mag 8, so it's not a super long video, at least the ones coming up. First one was UNH. As most of you know, that's a big healthcare company. And so the game I like to play, not that I played, I'm starting to play it now, where I make a prediction. And what I always tell you, if the chart isn't clearly bullish or bearish, it is a complete and utter crapshoot. You might as well go to Vegas, bet your money there, because you're going to get free drinks out of it. If you're trying to game earnings and you can't make a very strong case to be long or short going in, even then it's a big earnings. The most bullish of charts, you can see a stock get clobbered to the downside, and the most bearish looking charts, sometimes it goes the other way. But with that being said, if you're new to the site, if you're not new to the site, you've heard me say this hundreds of times over the years. If a chart is clearly bullish or clearly bearish going into earnings, ready to pop, not, they, let's say, a setup like this, like a, wedge type pattern or whatever, or bullish like this, there was earnings right there. You had a couple more downside days. The next big move is going to be in that direction. That's what my prediction always is. And it was back here. We went long UNH. This is not hindsight stuff. I'd give you a trade idea here. It were a couple bad days. So a couple points to this. Number one, when I make these calls, as again, that nothing is close to being 100%. You can't predict with 100% accuracy where something's going to go. That's just absolutely ridiculous to even think so. I'm giving you my opinion. You do with it what you want. On that too, I often say the initial reaction, particularly, especially that in after hours, if they report after the close or in pre-market, very often isn't the one that sticks. That's just noise. It takes a day, it takes a full day of regular trading session for all the what I call the starters to step on the field. You have a lot of bench warmers, second, third stringers, retail investors playing in the realm of the after hours trading session. Come, when opening bell the next day or that day if they report in the morning, then you have the institutions. They can maneuver. They need the liquidity of the regular session, especially with bigger stocks or even the small ones. So that's it. So don't read too much in to the initial knee-jerk reaction. Plus, there's three components. There's the earnings release, which is instantly disseminated. The machines can parse that data faster than humans, meaning algos will go through the release looking for keywords, start firing off trade programs. Humans are going to read it, try to decipher and interpret. You have all watched them come out on CNBC and talk through it and try to figure out how, whether it was bullish, bearish, what component of the earnings was, and how what it's going to impact the stock. So that's the first part. Then comes the conference call. You often get a lot more color and guidance in the conference call. So I can't tell you how many stocks I've seen pop huge on earnings, on an earnings beat, only to turn around and close and get clobbered down the next day because of the company came out and threw a little side note in the conference call or gave negative forward guidance. So that's stage 2, the conference call, particularly after hours. Those give it. And then stage 3 is how the dust settles in the coming days. So there's an example. And I didn't even think about this one when I queued it up that, we had a trade. There was earnings right there, little E if you can't see it. I had like 1 or 2 down days. And then I would have probably given it as a setup. Can't remember if we bought it here at support, maybe long-term support. Sometimes I'll do that, or on the breakout of the bullish falling wedge, or both. Either way, we hit my 1, 2, all 3 of my price targets there. Then we went on and like I often do, I'm happy. Sometimes I'll milk every penny of a trend, but more often than not, I like to just shear the meat, most of the meat off the bone and wait till things set back up. So after, gaming that up, hitting my third target there, I kept it on my radar. I waited patiently till we came up, hit the 200-day moving averages right there, and then we shorted it. And right at the highs, I believe that was, because I wouldn't have had the first target so close. So we hit my first. This is T2 here, second target. Sheared almost all the meat off that bone, right? So now you're getting, this is swing trading, guys. I could care less of a stock's long, bullish, bearish, long, short. I'm an equal opportunity trader. That's what we did with United. Now, with that being said, there's a point to this. And again, I was just looking at the first one that reported this morning, but why did I short it here? Because it ran into the 200 days, and a stock is in a bull market when it's above its 200s generally, and once they're taken out, boom, 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 the resistance. Failed attempt. Sometimes you'll take them out briefly, only to get smacked back down. Looks like earnings did that. There is one where earnings took it down, and this is a great example, and why I do these long-winded videos, why I decided to, encourage, told you my intentions to close Microsoft out and not ride that into earnings. Look, it's 50-50 whether it's going to go up and hit that third target. Like I said before it even broke out, a rally to the 200s would be my preference. I'll get to Microsoft in a second. But whether you're going to hold out for T3 or maybe you think Microsoft's going to new highs, and maybe it will. It can do so without me. But all I can tell you is stocks, especially big tech stocks or companies like this one, have the potential for huge gaps downs, and you can't mitigate that risk. Options you can, but then you're paying a lot for them, especially around earnings. Not worth it. I say, unless you have a high degree of confidence where stock's going to go after earnings, just be aware. And I also say, one of the many things I've made up in trading over the years, I call it the know your security rule. If you are going to hold a company into earnings, first of all, you might want to consider closing positions or not taking one right in front of earnings, but every now and then I will, if the charts tell me. Or I look at the stock. I simply look at the chart. I roll back and I say, what is that stock, especially recently with a lot going on, United, How does it trade around earnings? Well, we can see how it trades around earnings. There was a big E right there. That was a, boom, big gap there. That was not an earnings gap. There was right there, earnings. There's a gap there. It reported there. No big gap, but it went down. And this today was earnings right there. They'll populate the E in this program tomorrow, probably, whatever, just reported. So by know your security, I look at this chart and I say, well, here's a stock that has a history of a pretty big gaps. So even, again, the most well-placed stop, you could say, oh, you know what? I like United. Randy's right. I recognize that 200 days a big level. He shorted it last time, but I think it's going to pop through there. I'm going to take it because we're above the 200 symbol or whatever reason. And you put a stop right here. Well, guess what that did you? Nothing, because stock open here. You have two types of stop loss orders. A stop loss order, which converts to a market order at the open. So even if your stop loss order was right here and it was good to cancel, you got filled at the open. And what happens, you have opening order imbalances. You probably got filled at the bottom of the day, somewhere around there. You can look and check on the 1 minute chart. Or you say, you know what? No, he's right. Stop loss orders can get bypassed. And there's unlimited loss potential on those because you're going to get filled at the open, even if it gaps down way beyond your price. So I'll do a stop limit. Well, no, those don't work either because a stop limit says sell me at 340, but only 340 or better, no worse. Yeah, you have a stop limit order, but it's still an open order, and it's been triggered. The stop part of it has, but the limit part hasn't. The limit part says 340 or better, and so unless the stock goes there, you still own the stock, and it could fall to zero theoretically, go bankrupt, and that stop limit order did absolutely nothing for you. So there's a quick. I have to do that every earnings period. I know new folks coming to the site might not understand how limit orders work. And again, how it's really very difficult or impossible to other than options, which are, again, get very expensive. It's really impossible to completely eliminate risk around earnings. All right. So that's it. So, and my point was, how did it go into earnings? If I would have played the game, well, I would have told you it was at the 200, just like here. Last time I hit the 200, it's in a bear market. After going long the stock for a bear market rally, we shorted it. So my prediction would have been a down move. I wouldn't have traded this one. I can tell you that. In fact, we have a sister trade, but proper security selection, MOH. Now, MOH effectively hit the third target. I always tell you guys this repeatedly. All the trade ideas on the site are the actual resistance levels. So you can see here, had price resistance. And when we first went into this one, it was somewhere back here. We hit my first R1 entry right there. So we hit my first, second target, and now we're approaching, this is what I call proximity. You get in proximity of quadruple, not double, not single, but not triple, but quadruple resistance. Price, that major reaction high right here. The 200 simple, the red line, the 200 exponential moving average, the red line, which comes in perfectly with that 205.83-ish price support. The 200 simple, and then the primary downtrend line. And so now it probably would have made it up there all the way to either or all of these, but this was, remember, this is a healthcare plan stock, and so it's down in sympathy with UNH. Now, it could still play out. We're back to T2, but again, for all intents and purposes, T3 was effectively hit yesterday. I don't always, if I have price alerts, my price alerts are set when on the levels, and if I have to be watching it to tell you if it's going to get there. And when the price alerts go off, I'll try to send you an order. Another one like that, I'm just going to digress for a second. Novo hit T5. I mean, it basically same thing. I talked about it, then it hit it here. We bought it here, and there were two trade holding periods. This was our typical swing trade. We hit all four targets. At T4, I told you expected a pull back, and I also started talking about leaning towards a likely second test and maybe undercut of those lows. We got that. So I just want to say on the swing trade, that was the fifth and final target, but it's above the 200, still looks good. And I also, when we laid it out here, back here, we bought it right here, we hit my first price target. These were what I call trend targets, longer term trend targets. T1 was hit, as is often the case. We had a reaction, and we made that ever so slightly marginal, but now divergent, positive divergent low, and we've gone up. And so I still maintain T2, and still very open to the downtrend line ultimately being hit on this one. So there's no. I just wanted to do that update because I saw the reversal hair shot with a full tag, a full what I call proper tag of T5. But again, that was the actual resistance level. So. Okay, back to earnings. Let's go there. So we'll just look at a few again. Just kind of, I'm doing this even though these have already reported to kind of give you a feel on the market. These are market leading stocks, especially in the Dow. You kind of blue chip steady eddies, and then I'll get to the upcoming Mag 8 that are the 3 that are reporting this week. There's Boeing. Boeing reported today. I'm on a weekly. Let's go to the daily. And you can see clearly here a couple things happen. So if I were to have played the game, I see the big negative divergence has been building. In fact, I highlighted this divergent high right here, and we had that big correction there. Went up, and you have a primary uptrend line. The divergence, the same exact divergence that started back here, has only gotten larger, indicating a much bigger drop there. And you can see we have a high-level bearish PPO crossover. Those are often trend change indicators there, or signal of a trend change. And then this one has taken it down. Look, and it's not too late. I wouldn't have stepped in front of earnings anyways. My confidence wasn't that high on it, but I can tell you right now, it's an objective short inch. You might want to wait till tomorrow, see how the dust settles. If you can still get a good entry there. I would have to remark up price targets. I'll do that for you right now. That would be the first one there, 226. Then the 200-day moving averages. Pull that line down about right here. Come in on those reaction lows. So 226, 211 be your initial targets if that one plays out. I would prefer to study the weekly chart. So if you're serious about, if you're interested in Boeing, long or short, let me know. I'll do a deeper dive. I'll look at the 60 minutes. I'll look at some different time frames. And I also like to look at the rest of the stocks in the sector. All right, back to where we're at. UPS. We're not going to do each and every one, but these are just, again, market leaders. Some of these are in my things to watch list that kind of give you an idea of where the market's going, very important stocks. So UPS, we've played this one like a grand piano this year. We went long on support there. We hit first and even gapped above my second target. If you gap above the final price target, that's where you're going to get filled. So that whole thing I talked about gaps, earnings induced, that was an earnings induced gap. Sometimes they work in your favor because if you have a sell limit order, T2, wherever it was, I don't know if you can see this here on my chart, but that was T1, T2 we gapped above, see the little E earnings. And so it was still a trade in play and it still looked good. And I highlighted at the time. So when you gap above, if you have a sell limit order there, let's just say my price profit target was at the 200-day moving averages. I don't know exactly. Oh, it was right here. There's the line right there. You get filled at a better price. So that whole thing that can hurt you on a gap down against your position by filling you will work to your advantage because a sell limit order says sell me at this is 133.95 or better. And at open, it will trigger the stop part is triggered at the gap above that price, and then your order gets in line with all the other, and there's a buying order imbalances on the good side where it runs that stock up. So that was it. We took another shot there. We hit my first target. I don't know if that was T2 on that, and we failed to make it to that one. I can't remember. We went long somewhere here off the lows, T1. Again, we gapped above T1. There's another good example. We hit my second and then third and final target right there, right? So end of story. So pretty good trading on UPS. And here it's taken out the 200s. So this is one that I wouldn't have shorted. Actually, it's about flat right now. I'm gonna update this trend line right there. So we're walking up this trend line off the lows. There's a little bit of divergence here. I'd have to almost force it there. I don't have much of an opinion on that one. I just wanted to kind of update it there. And we just recently closed that out anyway. So, and it's also coming off a big divergent low. So it's worth noting that UPS, I wanted to share this. This is really a kind of a tell on the U.S. economy, is above the 200s. And if it proves to be a whipsaw and we fall back below them, there's where we entered that last one right there. Then that would be bearish. Let me just see if there's any others worth covering here. Nah, let's just move on. This one maybe because the regional banks are ready to pop. So synchronicity, excuse me. Oh no, it's Synchrony. I was right. Synchrony Financial reported today. Big divergent high. I don't have it labeled, but that's divergent high. That's a divergent high. That's a divergent high. There's a subsequent drop. There's a subsequent drop there. So far it's falling. And you have this little megaphone pattern right there. And this one's down on earnings, but right to the 200. So basically this level, if it goes much lower, 69.20, it's going to take out price support. It's going to take out the bottom of the broadening wedge pattern and the 200 days. The last time we took out the 200s was right here. If you missed it, you had an opportunity to short the back test of the 200, either one, whether you took the breakdown below them or the back test of them. You had another 27% profit on a short trade there. So keep an eye on that one. And like I said, the regionals are ready to pop soon. They need to take out, this is KRE, the regional banking ETF. Last divergent high there, you had a nice double-digit drop. That divergence has gotten bigger. Sell signal to come there, and it'll probably take them lower. Okay, let's get on to who's going to report after the close today. Let's just pick on, we'll look at the top two, STX and TXN. STX, because they rank them by importance on that earnings.com. This one needs to break below this trend line to trigger sell signal. Big divergences building, and that's one that because of the divergences, I would expect that one to drop after earnings. Again, I don't have enough confidence looking at that chart. Yeah, I mean, look, it's going to go, yeah. So whether it's an initial pop, but if this one better, in my opinion, wait for the trend line break. There's your trend line, beautiful uptrend line. There's your divergence line on the weekly chart. Tons of hot air on this one. Yeah, you just need the sector to buckle in this one to trigger that sell signal. So there's STX again. And when I call them down, it's not the immediate day after. It's the next big move, and the move is relative to each particular stock. In other words, a Procter and Gamble, the next big move might be the next 10%. You look at a tech stock like this, I'm talking the next 20 or 30. I believe will be the downside. That means before you go up 20 or 30, you're going to drop 20 or 30. All right, so hopefully that makes sense to you. And then we have Texas Instruments, TXN, obviously a big chip stock. All I can tell you, I'll borrow you over here, duplicate that. We have divergence building, barely really. It could take this divergence out. It made a slight higher peak there. It's a sloppy chart. I'm not big on this one, so I'm not really going to call it. But again, if it got up here, if it was there and we had divergence, a little wedge like this, I'd have more confidence in it. So either way, it is divergence, and it is bounce around this trading range. I'll say that one goes down post earnings, but again, I'm not going to bet it. Let me see if there's any others. No, we'll skip through. No big market movers there. Now we're on Wednesday morning. ASML, one of the few tech stocks that report before the open. Wednesday after the close. All right, we'll wrap up. This is where it starts to get heavy for this week. Microsoft, Meta, Tesla, right? Let's start out there. Three of the big Mag 8s. So we'll go to Microsoft. You just got an update on Microsoft. Busy board here, but I'm just going to walk you through there. So on Microsoft, I had multiple check marks recently, and my check marks are for the bearish case. We had a breakdown here in a back test followed by a rejection. So that was one check mark. We back tested again. Sometimes that happens followed by a big rejection. That's where you get the check mark. As I often talk about, the problem with the shorting a back test is you can continue to back test. You could have done this again, and it gets painful if you're short. So what I like to see to help validate that the fact the stock's probably going to go lower after back test is an impulsive rejection. That's exactly what that was. So that was a check mark. Then big level, the 200 days. We hit them, bounced off the 200 simple, bounced off it again, took them out there. We broke through. That's a check mark followed by a rejection, check mark. Fast forward to last week, Friday. I told you this was the best looking of the lot at the time of the Mag 8. And I even gave it to you as a long setup with a prediction if we broke the bullish long wedge, we could probably run up there. Give you a total of 3 targets. T1, which we just hit. T2 we hit today. I told you that was my preferred target, hence my preference to close out. 7% gain on the breakout. and there's only about 2.25% upside left to T3. Flip a coin. I'm not going to short this one here, but my preference is to close it out because it's not worth it. And look, and if you get it, you still want to close out before Thursday's closing bell, 4 p.m., because they report after the close. Based on these check marks, that one I believe goes down post earnings. It is coming off a divergent low. I'd rather wait and see what Microsoft does than lay any bet in front of earnings, and see if it remains after earnings, even if there's a brief pop up, in the coming days, over the next week after they report. Especially a big rejection down below there. And then, of course, I have that purple primary bull market uptrend line. That's going to be a major sell signal if the one broken right there. So that's what I want to see. My thoughts. It's already given enough check marks that I think that's the way it's going to go. All right. Next up, what did I tell you? Meta. META. Meta was the best in breed on the mag 8s up until this point here. Put in a double top, big divergence. It had been diverging for a while. It had a divergent high there. Had a sell signal, beautiful little trend line break, massive drop, but then powered on up like a lot of things, made a marginal new and still divergent high, double top, divergent high. Then came the sell signal, the breakdown. I'm sorry. That was a check mark there. I should have borrowed you, duplicate you. That was a check mark. Then it lost the 200s on an earnings miss. See, let's just play that game. If you were bullish and you thought the stock would go up post earnings and you were long, and you woke up to a gap down of about 10%, that probably blew right past any reasonable place stop. That also took you down below the 200s. That gave me a check mark. Several weeks of back testing with unable to get above the 200s were check marks as well, followed by a rejection, and we're back testing again. That's actually supposed to be here. The rejection was a check mark. This is a question mark. We're currently back testing the 200s here. I'll turn off all the lines so you can see. So that puts it in a overall bearish technical posture. When you're above the 200s, you're bullish. When you're below them, rallies back into the 200s, provide objective short entries, where a recovery above the 200s is bullish. So this is one definitely to watch. And again, if I'm gonna make a guess based on the technical posture, we're below the 200s or back testing, so my guess is going to be to the downside. We'll see. And if it's not, I start undoing a lot of these check marks I have for the longer term bearish case. Then I'm going to have to rethink my outlook, and maybe the NASDAQ 100 is going to break above that recent trading range I started the video with and go to new highs. Again, I look at these collectively. It's not any one of them that's going to take the market to new highs. Collectively, they all need to do it. The majority of them, not each and every one, but the majority. And then finally, Tesla. Big, when I put an X here, by the way, I didn't do it to Microsoft and Meta just now. There's this is a question mark. It should be, because earnings is going to most likely solidify these charts. It's either going to undo. This is a check mark right here on Tesla I gave you recently. I told you it broke below the primary uptrend line, back tested, followed by a rejection. But all of this needs to be taken with a big grain of salt, because as I often say, breakdowns or breakouts, bullish breakouts or bearish breakdowns that occur just in front of earnings have a much higher failure rate than those that don't occur around earnings. Because again, it's going to be somewhat a crapshoot. Yeah, insider trading happens, and you can kind of sometimes see where stock's going to go before after earnings. But again, anything can come out in either the earnings report or their guidance. So from a pure technical perspective, I do have a check mark recently. I had a check mark there off the divergent high, then the sell signal. That was also another one. The big, once earnings are out of the way, then the charts are pure, if you will, allowed to, kind of do what they want on a daily basis with natural supply and demand, barring any major kind of headline. Here's the 200-day moving average. We're still above it. So this would be your next check mark here. Borrow that. It hasn't happened yet, so I'll put a red X, duplicate that. the 200s need to get taken out for your next sell signal. So, you know, that's how it is, guys. It's not one. These aren't binary things. They're little steps, little check marks added. Check mark 1, check mark 2. That would be check mark 3. And that would be probably the final one, too. I've given you ranges and check marks and key levels that are what I call lights out levels. That's probably going to be the lights out level for Tesla. And there's also, here, I'll purple it up so we know that. All right, so that's it. And then the rest of them, we'll go to QQQ. NVIDIA is always the last holdout, February 25th. So we're going to have a while. And again, you know, my big level for NVIDIA is the bottom of the trading range, which will also take out the 200-day simple and exponential. It's about 165. That's where your question mark is. And we're unfortunately, we have almost a month to wait to see how they report. Alphabet did give me a check mark. I have a question mark on it because we broke down below the primary uptrend line. We've been back testing, as I covered with you yesterday. However, I need to see a rejection off there. They report February 4th. So it's going to be a little while till we know. And Apple, I was this far. I'm holding my little fingers doing that pinch thing. This far from giving it to you as a long there, which I was very clear, cover the short there. We nailed this one. Entered there, wherever we, we shorted right here, I'm sorry. Made a marginal new, still divergent high, evaded our stop by the skin of our teeth, but kept us in the trade. Hit T1, 2, 3, at which case I suggested full cover short because that's the pullback, the first pullback to the 200-day moving averages. And you can see how Apple just loves its 200, especially its 200 exponential. It lost it right here. It was in a bull trend up to this point, even hit it, bounced, kept the bull trend going, took out the 200 there, the red line. Look at that, over a week, probably 2 weeks of daily rejections, back tests from below. Once the market saw it couldn't take it, it was powerful and quick and down. Tested again, rejected, 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 rejected. Bingo, new bull trend intact. And then went up, and this was the first pullback to the 200 since it regained them right here. And since then, at the very minimum, it was strongly suggested to cover that short. We milked not 100%, but the bulk of the drop, and that was 10% or so profit there, and it's bounced 7%. And now again, they're going to report on the 29th, so they're coming up soon. And where does it go? Well, ultimately down. Here's my weekly chart. It's busy, I know. It's busier than the one-arm painter, but we had a divergent high there. We had a 35% drop. We had a divergent high there. We had a 32% drop. We have an even bigger divergent high now, and I expect an even bigger drop down to at least this primary yellow uptrend line, and that would be from the recent high. If hit anytime soon, going to be about a 43% drop. So that's my Apple chart. That's where I think Apple's going. But again, it's going to be the next, like I said, I'm going to wrap the video here. And I'll cover each of these before earnings again and after. But like I said, if there is a catalyst, the most likely catalyst that's going to break us out of those trading ranges that I started the video with, be it bullish to the upside or bearish to the downside, I think will be, the majority of these. You probably won't have to wait for NVIDIA a month out. The rest are going to report over the next couple weeks here, and then we'll have a good idea. I'm still, we have an active trade on QQQ, so obviously it goes without saying that trade's still intact. We shorted it, a few short entries here. We hit my first target, bounce as expected, and this is still my lights out level, 589. Once that goes, it should take us down to T2. I've given you my thoughts. Yes, I'm aware the 200-day moving averages come in about halfway down between T1 and T2, but I suspect we'll shoot down below, hit T2, bounce up, and then test the 200s for a little bit before if we go any lower from there. So, all right, I'm going to wrap it up here, get the video out to you guys, and that's it. Continue to hunt for new trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.